Hi, everyone. My name is Corey Klemmer. I'm the Director of Engagement for Dominant Impact Investments. I'm very pleased to be joining you this Earth Day to talk a little bit about what impact investing is and how it can help you and all of us protect our planet. So you've probably already heard a lot today and this week about how your dollars can make a difference. The most obvious place is probably how you shop, where you spend your money, what brands you choose to support, but also who you bank with. Don't forget the money that you leave in the bank is getting used for something. The banks can lend it out for all kinds of stuff. So then another strategy you've probably heard about is pressuring the institutions you're affiliated with to divest from bad business like the fossil fuel industry. What I'm going to talk about today is investing. It might be less visible, but it is hugely important for building a sustainable economy that works for everyone. Now, maybe you think you're not an investor, but a lot of us have retirement savings from our employers or from other places, and that money gets invested in the market. And if you're not paying attention, your money could be invested in the companies that we're talking about, in all of the fossil fuel industry and other dirty industries that you're trying to minimize. So even if you maybe are driving an electric vehicle and have adopted a fully plant-based diet, your retirement savings might still be undermining your objectives. And on the flip side, they might provide an opportunity to have a really good, positive, strong impact. So let's talk a little bit about what you can do. First, what is impact investing? This is what I propose your solution is. For a little historical context to understand where we came from, this movement really began with faith-based investors realizing around the Vietnam War that they were invested in Dow Chemical, the producer of napalm. And there was kind of an aha moment of how could we possibly be invested in and be profiting from the production and sale of napalm? And so those investors created quite a stir at Dow Chemical, and it really launched this movement to what it is today. The field of, it has many, many names, but impact investing, responsible investing, sustainable investing, maybe you've heard ESG investing, which stands for environmental, social, and governance investing. It really gained visibility in the 90s when it became a huge part of the anti-apartheid movement. So this was like really the first big divestment campaign where responsible investors pushed the companies they invest in to stop doing business in South Africa and with businesses from South Africa that was still under an apartheid regime. And it had a major impact in bringing about the end of that regime. Today, those tactics have been replicated in divestment movements from the private prison industry, the fossil fuel industry, and you hopefully have heard a little bit about those strategies elsewhere this week as well. What I want to talk to you about is what we do, which is taking that a step further. We have the exclusions. There's the certain industries we just don't bother with. We think they're so fundamentally misaligned with our values that we won't consider investing with them. But then we do deep research on the sustainability of the other companies that we might invest in. We look for good companies to invest in and gaps to fill and put money there. And then my job as the Director of Engagement is to work with companies to drive continuous improvement. Now, what does this look like? If we were just to compare how we invest against, say, the biggest 500 companies in the US, our process, you would see first there's that slice that we say we don't bother with, we think you're so misaligned, and that would include fossil fuel industry, the fossil fuel industry for the most part, nuclear power and weapons. It would include private prisons and several other industries that, again, just don't make sense for a sustainable future in our minds. Then there's another set of companies that we look at and we say, based on how you perform on environmental things as well as social issues, we don't think you're good enough. And then we're left over with about 70% of those companies that we can choose to invest in. And from there, we build our portfolio. The companies we pick out of what's left over get us to what we invest in. And that, in this hypothetical, looks about 55% less carbon intensive than the 500 companies we started with. Now, if you have an investment product as part of your retirement savings or anything, there's a strong likelihood you're exposed to most of these companies. So there's a way that you can further select your investments to avoid bad companies, support good companies, and reduce your carbon footprint. Now, this isn't where we stop. My job, like I said, is to work with companies on issues to drive continuous improvement and greater sustainability, both for the companies and for everybody. So one example of that is the work we've done on forests. We have worked on deforestation issues for decades, but we have had a special focus on it for the last few years. And if you look at forest loss, there's just no way we could reduce all of our carbon emissions. If we don't control the impact we're having on nature, it's not going to be enough. On the flip side, forests are really, really good at capturing carbon, storing carbon, supporting biodiversity, and supporting a whole range of ecosystem services that support our way of life, whether it's water management, temperature management, pests and pollinators and pest control. It's really incredible how much value forests create. But from our analysis, we found that it wasn't a big enough part of the climate conversation. And so we've spent the last few years really going at what are the drivers of deforestation and how can we systemically intervene to reduce the rate of forest loss, because it is still incredibly high. And so what we've done is we highlight the risks. We work primarily with companies, but also with policymakers, other investors, and stakeholders to identify and highlight the risks. And, so this is a risk, obviously, to the planet. It's also a risk to people, indigenous communities that live in forests. They support the forest, but the pressure that's put on forests is also put on those communities. And ultimately, businesses rely on forests as well. So by highlighting those risks, both to their own corporate operations, if it's a financial company, their financial exposures, they all have skin in the game here. So pointing out those risks help them come to the table and say, okay, we need to be part of the solution too. And then on the flip side, like I said, there's opportunity. And so a big part of our work has been focused on how do we get to forest positive? And that means getting to an economy that supports all of the value that forests create in order to, benefit both the planet, society, and the markets that we invest in. And so just as an example, one very exciting space that we're looking at closely now is regenerative agriculture. And we have found, and companies we talk to and work with have found, that by using regenerative practices, you can not only reduce the chemicals you put into the environment and improve the health of the local ecosystem, you capture more carbon, you support greater biodiversity, you save farmers money on the inputs, like they don't have to buy the super expensive chemical fertilizers, pesticides, and crops that are required for really intensive industrial agriculture. And in the process, you can begin to restore ecosystems and landscapes. So that's just one small example of how impact investing can not only reduce your footprint and improve how you are participating in the financial system, because we all do participate somehow. It's also a way to drive positive change and have a really positive impact. So with that, I'll just say thank you and happy Earth Day.